So there's this massive global energy transition happening, right? We're seeing it everywhere. Headlines about solar, electric cars, the whole deal. But what's really going on underneath all that? How does a shift this huge fundamentally change the value of the actual stuff that builds our world? Well, let's follow the money and see what story it tells us. Okay, so here's how we're going to tackle this. We're going to approach it like a real investigation. First, we'll start with the biggest question of all. What is value really? Then we'll look at the massive economic forces that are kind of hiding in plain sight. After that, we'll zoom right in on the key sectors in play, learn how to read the market story, and then finally, we'll put together a toolkit that's all about preparing, not predicting. All right, first things first. Before we can even begin to track how value changes, we've got to get on the same page about what value is. And the answer, it might surprise you. It really starts by challenging our entire idea of what money is.
This right here, this quote, it totally reframes the conversation. See, the money in your bank account, it's just a symbol. Think of it like a claim ticket. The real capital, the actual source of value, is the energy that's stored in all the physical things we use every single day.
And that energy, it takes physical form as commodities. This is the tangible stuff of our world. We're talking oil, gold, lumber. These are the real assets. They are the physical stores of value that our money is just a claim on. Getting this distinction is absolutely crucial for everything that follows. So, if commodities are the real store of value, what actually affects their price? Well, to get that, we have to look at the huge economic environment they all live in. Every single transaction, every price move happens inside of what we can call the sovereign shadow.
And here's a perfect way to picture one of the biggest forces in that shadow: inflation. Imagine a government prints more money. It's not creating more value, right? It's just cutting the same pizza into more and smaller slices. The pizza itself doesn't get any bigger. Your slice just got smaller. That right there is your dollar losing its value.
But why are we so focused on the US dollar? Well, it all goes back to an agreement made in a hotel in Bretton Woods, New Hampshire, decades and decades ago. That meeting made the dollar the world's reserve currency. And what that means, even today, is that major commodities like oil and gold are priced in US dollars, no matter where on the planet you are.
And this creates this really powerful seesaw effect. Think about it. When the value of the dollar gets weaker, it takes more of those dollars to buy the same barrel of oil. So the commodity's price tag in dollars goes up. And of course, when the dollar gets stronger, the opposite happens. Commodity prices tend to fall. It's a fundamental relationship that really drives these markets.
Okay, so we've got the macro environment down. Now let's zoom in on the scene of the crime, the specific market sectors where this whole energy transition is actually happening. Where is the big money really moving?
We can spot these big money movements by tracking something called sector rotation. The best way to think about it is like a tide. Big money, institutional capital, doesn't just sit still. It flows from areas of low potential to high potential. And in an energy transition, we're on the lookout for that tide to start moving from the old energy guard to the new.
And this slide makes it really tangible. On one side, you've got old energy, major oil and gas companies, which you can track by the ETF symbol XLE. And on the other side, you've got new energy inputs. These are the companies in the basic material sector, or XLB, the ones mining the copper, lithium, and all the other metals that are essential for batteries and renewables. The flow of money between these two, that's the rotation we're watching.
So, we know what to watch and where to watch it, but that leaves the hardest question of all, doesn't it? When? This brings us to the next tool in our kit, one that helps us understand the timing of these shifts by literally reading the market story. It's so important to get this. Charts aren't just random squiggly lines. They're a live record of a battle, a constant fight between buyers and sellers. They tell a visual story of supply and demand, and if you learn how to read that story, it can give you some powerful clues about what might happen next. So, a positive story, that looks like this, an uptrend. You see a series of higher peaks and higher valleys. This tells you the buyers are feeling good. They are consistently willing to pay more and more for an asset, and that means demand is in control.
A negative story, on the other hand, well, that's a downtrend. Here you're seeing lower peaks and lower valleys. This shows us that the sellers are in charge. They're willing to accept less and less just to get rid of their asset, and that supply is just overwhelming any demand out there.
But what happens when the story is about to change?
Well, we look for clues, like this double top pattern. So watch this. The price rallies up to a high, it pulls back a bit, and then it tries to push higher again. But it can't. It fails. It hits this invisible ceiling. That failure, that's a huge flashing light telling you the buyers might be running out of steam.
This quote just perfectly captures the psychology of it. That second peak isn't just a number on a chart, it's a statement. It's the collective voice of the market, of all the sellers planting their feet and basically saying, no, absolutely not. We are not paying more than this. That rejection is a powerful, powerful signal that the whole trend could be about to reverse.
But let's be super clear here. Technical analysis is not a crystal ball. Nobody, and I mean nobody, can predict the future with 100% accuracy. A much better way to think about it is like a weather forecast. Based on the current pressure and the wind, there's a 60% chance of rain. It's all about playing the probabilities, not trying to be a fortune teller.
And that brings us to the most important part of our entire toolkit. We've got the macro view, we've got the sector focus, we've got the timing tools, but none of this is about getting a perfect prediction. It's about something so much more powerful.
And this right here, this is the single most important mindset shift you can make. The goal is not to be a psychic, it's to be prepared. You don't need to know exactly what the future holds if you have a plan for whatever it might bring. That's where the real control comes from.
So how do you do that? It's actually pretty simple. We create a plan for the only 3 things that can possibly happen. We just ask ourselves, what am I going to do if the price goes up? What's my plan if it falls? And what will I do if it goes absolutely nowhere? If you have an answer for all 3 of those before you ever invest a single dollar, you've moved from gambling to strategic preparation.
Look, the energy transition is just one of many huge shifts we're going to see in our lifetimes. The tools, the framework we've covered today, you can apply them to any of them. So the only real question left is, how are you going to choose to face what's next? Will you be predicting, or will you be prepared?